5 years ago, I bought this house, my very first home in Canada. I was 23 years old at the time, and I still remember walking through that door thinking, wait, is this actually mine? A lot has changed since then: interest rates, prices, and even the process. So today I want to walk you through what buying a home in Canada looks like now, through the lens of what I'd do differently if I were buying my first home today. We'll talk about the process, we'll talk about what you really need to qualify, and also some of the hidden costs after you get the key that I really didn't know about back then. This is the very last episode on my series for newcomers to Canada, so if you haven't seen previous videos, go and watch them. They are a deep dive guide into what you need to know when you move to Canada. And thanks to our sponsor, LemFi, we are helping you to make your transition to Canada very smooth. LemFi is a money transfer app that's literally made for us. Whether you need to send money to Nigeria, Kenya, Uganda, or any of 7 other African countries, they've got you covered. So use my promo code, I will leave it in the description box, and get $10 when you send over $100 or more. Now let's get into the video. So let's talk about the Canadian dream and the market's reality. Owning a home in Canada often seems like it is this ultimate milestone, the thing everybody is searching for, the Canadian dream. But I want to be real that it is not as simple or as easy as it used to be. Some of the average prices that we have right now in major Canadian cities are like Toronto, over $1 million, Vancouver, even higher. Smaller cities like Winnipeg or Halifax may be more affordable, but it's definitely rising now. So if I were to go back and say, would I still want to own this property? The answer is yes. But what I would do now is that I would go in with my eyes wide open, because it's not just about affording a house, it's also about affording all that comes with it. So let me go into the home buying process, and we'll do like a step-by-step guide on the process, okay? If you are starting your journey now, this is the exact process that I would use to go from wanting to own to having the keys, but not making any mistakes in that process. So step 1 would be, I would start saving in my FHSA. Now this account was not even around when I first started my journey, but I would start saving for my property, and the FHSA is the perfect place to do that because of the tax benefits that you get from that account. I have a detailed video on what that account is, but yeah, first things first, start saving and or investing in that account. And even if you currently have savings right now, you can move them from wherever they are into your FHSA and you'll get those tax benefits. Step 2 would be, I would get pre-approved. So what I would do is I would meet with a mortgage specialist or a mortgage broker. I decided personally 5 years ago to go to a mortgage specialist. I went to the Bank of Montreal. I got my mortgage with the Bank of Montreal. I didn't speak to any other lender, so I basically took the rate that they gave me. The reason I did this back then was because I was working there and they gave me a employee rate. But if I were to do it now, I would instead go to a mortgage broker. A broker is somebody who has access to all the different lenders. They can see CIBC, TD, BMO, they can see every single rate that is available, and they will offer you the best one. So if I were to change something today, I would go to a mortgage broker. That person is going to check your income, your current debt, your credit score, and how much you have saved as a down payment as well. And next, what they're gonna tell you is the maximum amount of mortgage that you will be able to afford. So what that means is that they are going to say, okay, Reni, you have $30,000 saved, you make X amount of dollars a year, and you wanna buy this year. Okay, based on current rates that we have right now, we are going to give you a $300,000 mortgage. I think this is such an important step that a lot of people do not take, because it allows you to know how much that you can actually afford before you go out and shop. Imagine you just go to the mall, you're shopping at the mall, but you don't even know how much money is in your bank account. It's pointless, because if you go and you only have $200 in your bank account, but you want something that costs $300, you're outside of your budget and you've just wasted your time shopping. So instead, you go, you get your pre-approval so you know how much you can afford, so that when you're going to buy the houses, you know exactly how much you can afford. Another thing I would do during this stage would be to run the numbers. So ask questions to that mortgage broker. Like, if I get a house for $400,000 and I put down X number of dollars, what will my monthly mortgage be? I think a lot of people think about the monthly mortgage, but they don't know exactly how much it will be before they commit. But please, at least figure out how much your monthly mortgage will be before you commit to that property. And also this will let you know if you need to save a bit more towards your property as well. Now, step 3, this is the fun part for most people, and this is when you start house hunting. So what I would recommend everybody does is to work with a real estate agent, okay? A real estate agent is somebody who you meet with and they will show you properties across whatever region that you are in, and they will do it based on criteria that you give them. So now that you have your pre-approval, you can say, hey, I want to buy a property that is no more than $500,000, and can you show me different properties? And they will be able to show you properties within your range. The great thing is real estate agents work off commission. So it's basically a free service that you get. So you don't pay them until you get the house. So I highly, highly, highly recommend going with a real estate agent, and also ask them questions, okay? Ask them, when they show you a house, ask them questions like, okay, if I buy this house, what do the property taxes look like on this house? What would the maintenance bills look like on this house? Questions like that, because again, it's not just the cost of the mortgage, it's everything that goes into it. The real estate agent may not know all the details in depth, but they can always find it out. So please, please, please make sure that you ask those questions, because that's something I definitely did not do. Step 4 would be to make an offer. So when you finally find the one, the house that you love, your agent will help you put in an offer. One thing I think you should all do, if it's possible, is include conditions in your offer. What that means is you can say, I am willing to buy this house at X dollars, but only if we do a home inspection, or it's based on me getting financing. And when it comes to this, please get an inspector, okay? An inspector is something that I did not do. I thought that it's not necessary to get an inspector because I was buying a brand new house, but I definitely think that every single person, brand new house or not, should get an inspector to look at the property before you commit to that property. And also, don't just settle on a property. Make sure you are satisfied with it and that the inspector has thoroughly looked at it to make sure it is up to code, because it will cause you a lot of stress down the line if you have issues with the property. Step 5 would just be to secure your mortgage. So remember, you went to that lender before, you went to the mortgage broker before, and they told you how much that you will be able to afford. Now you need to go back to them, tell them you have an offer, and now finalize the loan with your lender. So they will tell you the interest rate, the term, the amortization, and they will lock in that rate. One thing I would do differently in this situation is that I would do a fixed rate. I actually did a variable rate 5 years ago, which means the amount I pay differed every single month. But what I would do now is a fixed rate. I know this depends on your comfort level and how much risk you want to take, but I think it's easier to just fix in a rate for 5 years. Know that you have the same payment for the next 5 years, and after 5 years we'll change it, but I think it's easier. And you need to know yourself and know if you can deal with the ups and downs that may happen when it comes to a variable rate. So if I were to change things, I would just go with a fixed rate. The last stage is closing day. This is when you go to your lawyer, you need a real estate lawyer, and you sign a stack of papers so that the title is officially transferred from the builder or the previous owners to you. So what you're gonna do is you're gonna pay your down payments, your closing costs, and boom, the keys are yours. So if I were you in this situation, I would just say you need to make sure you realize all the closing costs that will go into it. The closing costs often amount to up to 5% of the actual price of the house. So that includes title insurance, includes lawyer fees, includes land transfer tax. It's a lot. So just make sure that you are aware of these costs before you go into your purchase, okay? So those are some things I would do a bit differently if I were to go into the process today. I think that it is great to purchase a home, but you just need to go into it well informed. I think the most important stage of what I just mentioned is that you know your numbers. You know that you are going into this process understanding every single number that goes into your property. If you want me to do a video about how much I have spent on this property over the past 5 years, you can let me know, and I can tell you if it has been a successful investment or not. But yeah, that's what I would do if I were to do it today. If you think you are ready to purchase your first home, follow that process, but also here are just a few tips and things you actually need to qualify for a home. First, I would say aim for at least a 680 credit score so that you have the best rates. So if you have not boosted up your credit score yet, watch my video that I made about how to boost your credit score. Second, if you are newer to Canada, because this is our newcomer series, I would say you should start building credit now. Like, credit is extremely important. So again, watch the series so you know a bit of how to boost your credit. Second, I feel like I've mentioned this, but just remember to factor in all the costs that will come after you buy. So property tax, which is paid to the city, it can be thousands of dollars a year. Remember your utilities, which is hydro, water, and gas, internet, etc., etc. There's maintenance, which is your roof leaks, your appliance breaks, there's lots of stuff that can happen. And then also home insurance. This is another one that you have to consider. And this is required by lenders because it protects you and it protects your stuff inside. And lastly, furnishing and rental costs. A lot of people don't even think that after you buy the house, you also have to buy all the furniture that goes in the house. So those are just a few costs that I think people don't really realize when they are purchasing their house, and then they end up in that situation where they are house poor. If I could go back in time, I would really build a house maintenance fund right from day one, because it will really save you from panicking when your hot water tank dies. So 5 years later, would I do it again? Yes, I would. But I would just make sure you follow that process that I just mentioned so you don't make costly mistakes. Owning a home in Canada is definitely still possible for you. It just takes planning, it takes patience, and it takes a lot of perspective as well. If it is something that you want to do now or in the near future or even in the distant future, start preparing now. Build your credit, save consistently, and learn about real estate before you dive in, because your house is not just a dream, it is a responsibility, a very, very expensive responsibility. So again, I emphasize this because I want you to go into it informed and empowered. I hope this video gave you exactly that. So if this video did help you, give it a like, hit the subscribe button, and also share with your newcomer friends or any friend who is on their home ownership journey. That is a wrap on our LemFi series. I hope that you watched the videos and felt like you know how to be successful as a newcomer in Canada. Canada is welcoming you. You are able to thrive here, but it definitely takes a bit of intentionality. And if you got through all 12 of these videos, that means you are somebody who is on the right path. So thank you so much for watching. Again, remember to share this with somebody who may benefit from this, and I will see you in the next video. Bye.